All right. Hello, everyone. We are live. Back again for another market open. And it is Friday. Friday. It is Friday, right? It's been a decently long week. Oh, yes, it's definitely Friday. Been a decently long week. Obviously for me, Vegas, all that stuff. But nonetheless, we are back. Let me just tweet this out. Live market open. Woo! It's Friday. Dave, what's up? Cameron, Damian, Uriel, your financial independence, Bacon Bombs, Jason, Damian, Lars. It's freaking Friday. And so I think today we are going to see how badly the stock market sell-off is. Or how nice the stock market sell-off is. Showcat, what's up? Hi, Amit. Bring the Japanese guy from Twitter to your vlog. Bro, that guy does not speak ever. He's actually so cool. Weeble's like, please update the app to continue using our service. What the fuck, Weeble? Like, they can't use the app. Oh, no, it's here. Okay, cool. I was like, I'm not trying to update the app just to use your service, my guy. Just use it. Okay, how's everybody doing? First of all, what's everybody's weekend's plans? Did you not have a good time at Vegas? No, I had a great time at Vegas. It was tiring. It was long. Sunny, what's up? Miyoko, did you see my tweet? I just found out that you were the person on Twitter that was responding to me. I was like, who is this person? And then you said, oh, this is Miyoko, by the way. And I was like, oh, shoot. That's Miyoko. I was like, I've been wondering who's Miyoko for this whole time. And it's like, that's you. You're Miyoko. So I'm so happy you told me that you're Miyoko, because I was like, who is Miyoko? I just wanted to put a face to it, and then boom, there you are. All right, so Palantir pre-market down 0.80%, nothing too crazy. Obviously, it's a red market. Tesla, wow, 260. Oh, here we go, 265 pre-market for Tesla. Well, today's AI day as well, right? So, I mean, Tesla 265 is what I was looking for to nibble into it. But AI day is also here today, which means if they announce something nice, the market might just get excited. Apple, wow, down to 141. Yo, the amount of things I've seen on Apple, oh my goodness. Scott, what's up? I don't like how the icon on all your videos say live. Was very hard to find this stream. I think YouTube does that. They like make the channel go live, and you have to go to videos, and it's the first one that it's YouTube. Apple's going to be interesting. Apple 129 was its recent support or its resistance. It is the support. The resistance is how high it gets. And the thing that was really interesting about Apple is that they did not rally this week as the S&P rallied, or the days that the S&P rallied. If Apple drops, the whole market drops. If Apple doesn't go up and the market goes up, that's okay. But if Apple drops, the whole market definitely drops. So Apple's going to be something very interesting. Apple and Tesla are both destroyed pre-market. So Palantir, there's nothing crazy pre-market. S&P 361 not hitting the new lows in the pre-market. Spotify, wow, 86. Oh, by the way, your girl Kathy Wood, your girl, not my girl, your girl. When she buys Ginkgo, she's my girl. She's everything. But when she does this stuff, she's your girl. She sold some Spotify yesterday. I'm making a video on that in a little bit. Because I gotta talk about it. But wow, it's a bloody market. There's not too much news in the actual world that's like super crazy, but it's there. Good morning from Charleston, South Carolina. Hurricane starting to make an appearance. First of all, everyone stay safe if you are down in that area, especially Florida. So D Williams 33-0. I hope you are doing okay. Because I know that's a rough situation for a lot of people to be in. So my best for everyone who's in that situation. Morning, Amit. This is my favorite pattern on you. I should get more of these sweaters, right? I gotta do more of this. Haynes, we need Apple and Tesla to drop to get all the gas out of the market. Yeah, man. I mean, I saw a really good tweet thread the other day that says like, we need Apple and Tesla to we need the market to just get red and move on. Like we cannot do this without it becoming red. And so we got to keep that going. All right. The market is about 45 seconds away from opening. Let me get my bell. Boom. Here is my bell. Those who are new to the channel, we ring the bell when the stock market opens. So if you are not awake, to be honest, I'm not awake all the time. So this is what we do to get awake and to become a little bit more awake. But look at all that red. It's red, red, red. Time to monthly DCA into the indexes. Okay, Dad. Monthly DCA into the indexes. I put my volume down. It's payday and quarterly bonus. All right, Dave. Shout out to you. On September 30th, 2022, last day of September, at 9:30, September 30th, 9:30, the stock market in the United States of America is now open. Wake your ass up if the stock market is not, or wake your ass up because the stock market is open. It is time to see the damage. Tesla, let's see what we got. 264 here, down 1.4%. AI Day, I'm not going to be streaming, but there's a bunch of other channels that are going to be streaming. So I'm pretty sure there's going to be some awesome stuff that Tesla announces. Apple, 141, down about 0.8% in the morning. DNA Ginkgo Bioworks, 313, down 0.32%. This ran up 20% today at 340. This week. So it is now down. S&P 362. Bitcoin 19,268. Nothing too crazy for Bitcoin. Duolingo 93. This is like a Rosetta Stone new technology ed tech startup. Open Door. Well, it's not a startup, but it's a more established company, but nonetheless. Open Door $3.11. Nvidia, the craziest stock I have seen this week, down to 122. We thought at 138 it was a buy. I thought at 144 it was looking nice. 130 was amazing. 125, no way. Now it's at 122. It makes you scared to buy stocks like these because you're like, well, what's the bottom for it? And obviously DCAing is the correct methodology, but goodness, it's like, what is going on? We've got SoFi at $4.85, under $5. I'm not buying it yet. Honestly, probably won't buy it today. I want to see what happens. I want to give it some time and see what happens on Monday. Netflix 238. Google below 100. Google staying within the 97, 98 range. I went to 96 at one point, but they're not letting themselves get destroyed and go down just yet. I think the entire market would have to take them down in order for them to go down as well. Pinterest at 23. Neo, if you're into that stock, $15.43. Teladoc, $26. And Twitter, of course, holding its way up at 42. But I know some more. Oh, I've got to show you guys these. You know how when they do an investigation, you have internal texts given to the Department of Justice or whatever between like the people that are talking through emails and all that stuff. There was some funny shit by Elon Musk and a lot of these other people talking about this Twitter deal. Gabriel, good morning. Good morning. Justin, what happened to the podcast? No, Jason, he's not talking about money talk. He's talking about the other one. Honestly, bro, me and Tom just got busy, but we'll be back at it next week. We just got super, super busy. It's okay that you spent all your cash yesterday because you can't put cash into stocks anyway. You can only use digital money. That's true. That's very true, Jason. Are you buying stock with investors' money? Of course, guys. I'm taking $125 out of the $300,000 that I raised, and I'm betting it all on black. No, I'm not investing stock with investors' money. That's my money. So by the way, I hope you guys, I mean, I probably haven't told this before. I don't take a salary from any of the money I made. I do not take a salary. So all the money that I raised for Aldea, none of that I've taken for my personal, use because I don't take a salary. My co-founder doesn't take a salary. I saved up. I did the responsible thing for the past 2 years. I saved up a lot of money before I quit my job. And a lot is relative to me. Obviously, I don't pay rent. I live with my parents, all that stuff. So I saved up enough for me to survive. And so I do not take a salary. And I would legally have to disclose if I do take a salary because it's part of the financials and all that stuff. So that's what we're doing. All right, CNBC. Let's go to CNBC. Let's see the talking heads, see what they are talking about. Hold on. Of course they're going to make us click this shit. Bleaky's Peter Bukvar explains why he sees signs of the 2008 financial crisis. I'm sorry to start with a bearish video, but that title got me. Here we go. All right, let's see. What are the similarities here?
Markets paying close attention to what's going on in the UK right now. And our next guest says what he's seeing reminds him of 2007 and 2008. Joining us right now on the Squawk Newsline is Peter Bukvar. He's Chief Investment Officer of Bleakley Financial Group and a CNBC contributor. And Peter, your note this morning caught my eye because I didn't know what an LDI was. I was even more concerned when I said that this reminds you of 2007 and 2008, but explain that. It's not as dire as you might expect at first glance, but there is some pretty striking similarities.
Cholesterol.
Yeah, outside of the banking and the housing implosion in 07, 08, it seemed like every day we learned something new about some exotic product that some bank held. We all learned what a CDO was. And today we don't have the banking and housing challenge, but we learned about a new term, LDI, a liability-driven investment, where UK pension funds borrowed money and leveraged themselves to buy more gilts in order to meet their pension liabilities in the future. And that was really the tremor that the UK gilt market felt over the.
Okay, real quick. So this dude is basically saying in 2008, we found out what all these different terms were. Obviously, I'm sure a lot of people in the audience watch The Big Short, and all these different terms led to like understanding what are these financial instruments, these financial derivatives that people are playing with that are causing these like insane forms of volatility internally that we don't get to see the effects for next couple of years that lead to a market crash. He's talking now about what's going on in the UK, explaining why they had to initiate quantitative easing again, which is why we got that big catalyst rally back on Tuesday, and saying that it has signs of that same internal games that we were playing with financial instruments back in 2008, but this time in the UK.
The past couple of weeks, as prices fell, yields rose. A lot of these pension funds got margin calls. They had to post more collateral, and that is why the Bank of England stepped in. So you have to wonder how many other exotic products that we never heard about are lurking out there that we're going to soon hear about.
Yeah, I think that's what concerned me the most, just the idea that it's always leveraged in some way, shape, or form. When things move quickly, when markets move quickly, those dislocations can break things. That's what we saw there. We've been asking people about the potential for that here, and Roger Altman this morning said, no, things are operating fine here. Loretta Mester, the Cleveland Fed president, said that yesterday as well. We don't see any problems here. It's just if you have issues like the British pound moving so drastically, you have to wonder what else could be potentially leveraged to that. What else could be potentially leveraged to gilts? And if the Thai baht can bring things down here, why couldn't some of those functions?
When you get such a dramatic rise in interest rates in a very compressed period of time, we're going to hear more stories like this. And it doesn't necessarily have to be an exotic product. I mean, just take a small business that borrowed floating rates. They certainly did not anticipate such a dramatic increase in their interest expense. But now at the same time that maybe the revenue growth is slowing because the economy is no longer growing, well, they're going to have a potential cash crunch. So while that's not going to necessarily make headlines in terms of LDI, that's going to be just another sort of collateral impact from this, what I call a rate shock in terms of the velocity of the increase.
Shepard Smith here. Thanks for watching CNBC.
I mean, it's interesting. It's not like it's not like to me that there's an entire UK crazy thing going on, right? Like there's something that we don't know about, but I guess you could say it's an argument. Let's look at this one. There's more pain to come in the tech sector, then we'll go back into the market.
Meta CEO Mark Zuckerberg has told employees.
And Meta is interesting. They just started a new restructuring freeze. And I, like a lot of people, are starting to think that it's not just the macro on Meta, that it's just Meta. If you bought Meta 5 years ago, you are down 20% on your investment. Exxon Mobil is now worth more than Meta. An oil and gas company that used to be the most valuable company in the world, a tech company replaced them because they connected billions of people. The oil and gas company is now worth more. It's interesting.
It is implementing the freeze and that the company will be taking more steps to reduce costs. That could reportedly include more restructuring and downsizing. Previous reports have suggested that Meta was planning to cut expenses by at least 10% in the coming months, including reducing staff. The stock now below the lows of the pandemic. And this morning, down more than 3.5%. Joining us right now is Brent Hill. He's Jefferies equity research analyst. Brent, I think there's sort of two big questions. What does this mean for Meta? But maybe perhaps more importantly, what does this mean across the sort of Silicon Valley tech landscape in terms of what kind of restructuring we may or may not see over the coming months?
Andrew, I think there's a coming ad storm as it relates to slowdown in what we're seeing in spend. And we've been seeing this across the social companies. So you have an ad slowdown, which is the first thing that companies cut when there's an economic headwind. I think the second component is competition. Obviously, there's been a stampede to TikTok. Very few 18 to 25-year-olds are still on Facebook. They stampeded over to TikTok and to Snap. And so I think you have a competitive issue as well.
Mm-hmm.
So in the interim, you have revenue stalling, you have big investments going into the metaverse, you have operating margins coming down, and then you have the combined effect of no interest in buying technology right now. And that's a statement across the board.
So we've got rising interest rates. We've got inflation that's not going down. We've got Meta's PR problems. We got people not interested in buying tech stocks. And according to Brent Hills from Jefferies, I think this guy was at the Palantir Q1 call and he asked Karp a question. I might be wrong on that, but I think he did. People don't want to buy ads. This guy's thinking there's an ad storm coming. If there's an ad storm coming and Meta and Google hit that and they bring the market down, this might be what we need to actually take us down to a really low level on the S&P. Trading with the dummy in the chat says, Amit, I can't talk crap about your picks anymore. I'm down 50% on Meta and it was one of my biggest holdings in my portfolios. Well, no, man, all of us are down this year, whether it's Palantir or Meta. It's just the whole market came for everybody. So yeah, at this point, I guess we'll see what happens.
Across both software and internet. So there are multiple headwinds that they're facing in the interim, and obviously a stall out in hiring is suggesting things are getting worse, not better. So growth's going to go negative this quarter. Last quarter it was negative. It could get even more extreme as we go into this economic storm. So there's not really a lot of light until we get into 23. The good news is the valuation, is pretty washed out. Sentiment is probably the worst of any of the large cap internet names, and the stock's now trading right next to eBay and Expedia.
So does that mean you want to own it or not, though? I mean, I think there's a question here as to whether you think this is a falling knife or you say, you know what, there's value under here somewhere.
I think there's value, but I think that we're dealing with the same thing across tech in the next 6 to 9 months. Tactically, it's painful. There's more pain to come as it relates to technology, unfortunately. And I think that this is an asset that can turn. And the analogies we've used is having covered Adobe and Microsoft over the last 20 years. You saw Microsoft pivot when Ballmer departed and Nadella came in. The stock goes from 30 to 300. Same thing happened at Adobe. Steve Jobs, when he was alive, was bashing Adobe Flash, and everyone thought Adobe was left for dead. They turned it around, went from $30 to $700 a share. So this could be the same situation. I'm not saying it's the same exact outcome as Microsoft and Adobe, but we've seen some great tech companies make their way back. And I think that they have the makings of a comeback. It's going to take time.
Is it a comeback because the advertising business comes back, or is it a comeback because of this pivot and investment in the metaverse? And also, what do you think happens to that investment in the metaverse given these declines and the restructuring?
It has to be advertising and the metaverse. Remember, the majority of the revenue here is advertising and will be for quite some time. So the pivot to the metaverse is still years out. It could be longer than we all think. And that's the concern, that all these dollars are going in. No one really knows where they're going.
Meta. Oh my. I mean, he makes some good points there, but there's also some things to take into account. Like the pivot to the metaverse thing, you have to believe the metaverse is happening. The advertising business, when I bought Meta at 325 back in January and I sold at like 240, I bought it because of the ads business. I was like, the ads business is great. And then I realized that's not going to hold up the valuation. Chris says, don't think this is 100% true. I was sitting at the airport at the end of the day, and the majority of people were watching social media platforms. So basically you're saying, Chris, that the ads business is not going to decline if a lot of people are using WhatsApp, Instagram, or YouTube. Look, it's not a bad point. I think I'm also weary when people say there's an ads apocalypse coming or whatever, because like we all use these apps. And unless you pay for premium, which most people don't, like, and there is no premium on Facebook and Instagram, advertisers will be there. And if the ads get cheaper for the advertiser and our attention is still there, like the supply and demand of the ad becomes even more attractive for the advertiser. So I don't know necessarily if there's like going to be this massive level of stopping to spend on ads. However, if there's a real macroeconomic downturn, there's no way businesses are going to spend as much as they're spending right now, which means there has to be some level of decline. So even though the level of engagement is on another level, Facebook just might not have the inventory to hold that unless they massively slice the prices on those ads, because advertisers will be like, screw you. I don't care if you have the users. We can't afford to spend $50,000 every month anymore. Then they're gonna have to decline the price, which means Facebook's gonna lose revenue regardless, and then their earnings are not gonna be amazing. So it's I think it's a really delicate balance. Like, this doesn't have to happen. They're they can do fine as long as people still use the product, but advertisers have to feel that it's still worth it during this time. We will all be having SEX in the metaverse in Mark Zuckerberg's ideal future. Interesting. That'll be a fun thing to do. Amit left the YouTube metaverse for 3 days and he hated it. Yo, Rizzy, this is so true. This is so true. Literally, I left YouTube and my little, as you can see, this real brick wall. I left this real big brick wall for Vegas, and I hated it, bro. I hated Vegas. Like, I love coming back here and just being on this computer. So the metaverse to me is like, the YouTube metaverse was everything. Okay, Arc Innovation, $38. Arc didn't do that much selling or buying yesterday. Well, she sold Spotify. Now, the sell on Spotify is interesting. She has 700,000 shares. She liquidated 2.3 million shares last June. She hasn't sold a single share since then. Well, actually, she sold a week ago, a couple thousand. And now she's selling a little bit more. So I'll make a video explaining my thoughts on that, but it's interesting. Advertisers will come back. That's not the issue. The issue is Apple. That's true. I mean, they got to deal with that. But now Apple's getting their stock price demolished as well. So, but yeah, they screwed them over when it comes to the targeting. What people are underestimating is the growth of international countries are still getting higher level of connectivity, thus opening up more markets. Chris, that's a good point. I don't know if that means that that's going to happen immediately. And if it doesn't happen immediately in the short term, like we don't get 1 billion more people using Facebook because that's really hard to connect all those people to the internet, then I think the stock's not going to benefit off of that thesis. Like long term, sure, which is fine. Most of these stocks will be better long term. But probably, I don't know if that thesis saves the stock immediately. But you're right. More people are going to want to come online. More people are going to want to talk about themselves. More people are going to want to express themselves. And if that's the case, then that's going to help everybody. All right. Let's see this one. Here we go. Let's talk about them. Nike was down 10% after hours. Let's talk a little bit about what's going on with Nike. And I think that's also why the market's down a little bit. Nike's a pretty big stock, and they were down. Let me stop sharing this, and let's share this one.
Of Nike dropping after the company reported a 44% increase in inventories for its latest quarter. Joining us right now is Carrie Firestone, CEO of Horace Asset Management and a CNBC contributor. Good morning to you. We've been talking all morning about Nike, Carrie. What do you think is really happening? How bad do you think this inventory problem really is, and what do you think it says about everybody else?
Nice to see you, Andrew, and I look forward to that interview with Brian Roberts, whoever does it. So with Nike, I would say that inventory was much higher than expected. No one thought that it was going to be a good quarter, but when you have inventory that's flooding markets all over the world, you're going to have a lot of discounting. We knew that there was going to be a hit because international markets have been weaker. Just their economies have been weaker than the U.S. China is 17% of Nike sales. International is 60% of sales. And while it's down 43% this year, Nike is still selling at 25 times PE. So I think that's just tough, and it doesn't portend well for other apparel makers and retailers that we'll be hearing from over the next month or so.
But I think what we were trying to understand, Carrie, is do you think this is a problem for a quarter? Is it 2 quarters? Do you think the over-ordering, if you will, and build up in inventory is a thing that we're going to see over the next 6 months? Becky and I were talking about, when you place these orders and start to manufacture stuff, is that a 2-month out situation, a month out, or do you think that's a half a year out?
So that's a dilemma in terms of analysts trying to figure it out because of the following. Nike is one of the companies that was best at predicting what their demand would be and producing enough to fulfill that demand over a short period of time. And they had great resources and great supply chains. As we know, supply chains have been disrupted all across the world, particularly in Asia, I think, and Nike has a lot of manufacturing in Asia. So their ability to produce on a short-term basis has been decimated, but now the ability to understand what demand really is going to be when you had that pent-up demand, I mean, through the pandemic, lots and lots of demand, and they started to over-inventory, as we've seen, across the landscape. So, figuring that out, I think is tough. Certainly through the Christmas season, through the holiday season, we're going to have excess supply in stores, and hopefully that will resolve itself next year. But, people look at the next quarter right now. This market is pretty jittery.
So just do it or no? Do we just do it or no? Because people are just not buying. 44% more inventories? Goodness freaking gracious. That's insane. By the way, guys, I think I need a catchphrase. When something is crazy, people are like, that's crazy. I need a catchphrase. We need to come up with my own catchphrase. So every time we see Palantir at freaking $3, which we're going to see probably next week, I need to be like, I need to say the catchphrase. Right now it's at 822. Palantir is performing inversely to the market. It's up 1.67%, 822. Oh, by the way, shoot, I forgot. I don't know how many of you saw, we got a $229 million contract yesterday for 1 year. The video that I made yesterday. We got a $59 million contract after hours. I found out at like 6 p.m. And this is over 5 years. This is not for 1 year. And this is for making like intelligence-based apps for the government. So this is not bad, man. I mean, it's been pretty cool. I'm going to show up a picture in a second of all the deals that we got on Palantir. Let me also go to Nike. So I have not bought a Nike product in a long time. Primarily because I don't really buy clothes like that. Nike also is just too expensive for me. I mean, like, I'll go to a Foot Locker. You want to get like a hoodie, it'll be like $90. I'm like, no, I'm not paying $90 fucking dollars for like, that's just ridiculous. I don't care if it has the Nike logo on it. So Nike has been one of those, like, I don't know. I've never been that excited to buy it as a stock. Do they give a dividend? I don't even know if they give a dividend. I remember they were at like 90 during COVID. Let me look at their max. Yeah, look at this. Where's the height of the pen? They dropped to like the low of 59. Yeah, and then right here, by August, they were at 100, 2020. I remember seeing Nike run from like 50 to 120. 177 was their highest back on November 30th, 21, and now they're back down to 87. Last time they were 87 was same time, August 2020. So, I mean, Nike is not one of those stocks I would care too much about, but if it's one of those things that you think is going to be around for a long time, then obviously it could be a decent part of the portfolio. I'm an Under Armour person. I'm going to ignore that. No, I'm just kidding. $90 a mid. How about 140? LOL shows the last time he bought a fair. Yo, it's been a while. Only thing I buy from Nike is like the Roshis, bro. Because like the Roshis are cheap. And I'm like, all right, boom, that's good. But other than that, I'm like, I'm not buying anything from Nike. Nike is not. What's the good thing about Nike? Okay, first of all, a couple pictures we got to see. Here we go. Let's do this right here. This is some of the so when you do an investigation, you have to give up all your text messages and emails. That's why you want to be careful sometimes if you know you're going to be investigated with the stuff you're saying. Here's Parag Agarwal, CEO of Twitter, texting Elon Musk. He says, "You are free to tweet. Is Twitter dying or anything else about Twitter? But it's my responsibility to tell you that it's not helping me make Twitter better in the current context." It was back in April. "Next time we speak, I'd like you to provide you perspective on the level of internal distraction right now and how it's hurting our ability to do work. I hope that Ask Me Anything will help people to get to know you, to understand why you believe in Twitter, and to trust you. And I like the company to get to a place where we're more resilient and don't get distracted, but we are there right now." Elon says, "What did you get done this week?" "I'm not joining the board. This is a waste of time. We'll make an offer to take Twitter private." That right there. What did you get done this week? I think that should be like tattooed on someone's face or something. What did you get done this week? That's all that matters at the end of the week. It doesn't matter if you got a trillion things done, but you can't have gotten 0 things done. And I think, that's Elon. He's like, motherfucker, you don't work. He's like, no one at Twitter actually does anything, which is true. Because if anyone at Twitter did something, we would have an edit button by now. We'd have got rid of all the stupid bots for it by now. And we would have more features in Twitter that make the experience. Why can't you schedule a thread? We can schedule videos. We can schedule photos. Scheduling tweets is so important for someone like me that manages a bunch of accounts and I need to schedule tweets. Why can't I schedule a thread? That's the problem with and look at this. Elon, Chris says AI day today. Elon's going to be talking about crazy AI, and Parag over here is basically doing nothing when it comes to Twitter. So that was one thing I want to show you. The other thing I want to show you right here is this photo. Hold on, let me pick it right here. This photo on my Twitter that I liked, it is all of Palantir's deals over, here we go, over September. So here we go. We have a bunch of this stuff, and we have 59 million. This was yesterday. Contract with the U.S. Army to develop an intelligent app. 229 million with the U.S. Army Research Lab. 50 million Veteran Affairs. 43 million AI ML capabilities. U.S. Army Research Lab. 47 million Department of Health. 65 million NIH, National Institute of Health. 25 million Hyundai Heavy Industries. A bunch of stuff. Total value of all awarded contracts this month: $612 million for Palantir. So when we were talking about government slowdown, almost all of these, outside of like 1 or 2, are government. Now, that doesn't mean they're all this year. Some of them are 1 year. Some of them are multi-years. But the fact that they collected more than $500 million of revenue in 1 month, and they closed those deals, it's not bad. That is not bad at all. So I mean, Palantir's had a pretty decent month. I can't ask for a better month. Is the stock going to reflect it? Probably not. But as a shareholder, I'm pretty excited with the month that we had, and we're gonna see how it ends up playing out. But I can't be super upset about it. I can't. Okay, Apple stock. Let's learn a little bit more about Apple. We're all trying to understand if this is a trap or if this is a deal. So let's see a little bit more about what's going on with Apple.
Thing you said is coming true. Like Nostradamus. So we're testing the lows that you said we would. Now, you said in probably late summer or early fall. You expect new. Okay, let me ask you: have we breached the lows, or are we in the test phase still?
So yeah, in the test phase still in terms of the summertime lows, which show support for the S&P 500, just a minor support level, mind you, around 36. We've already seen a breakdown below that very important 38.15 level. And that, unfortunately, longer term yields a downside projection of just south of 3,200. So unfortunately, just kind of preserves the bear market cycle that we know is intact here as these lows are in play as support. There was a really widespread oversold indication coming into the start of this week. And we have some risk metrics that we're watching here in the very near term, specifically that 36 level for the S&P. If you see a couple of good closes below, that's another breakdown and would increase immediate downside to next support, which is sort of an interim level around 3,500. We're also watching Apple, of course, and Apple, unfortunately, is poised to open lower. And in doing so, not only has it broken that 150 level, but it also will be stopping out an oversold signal. So we do have some structural issues now with Apple, which, of course, is very important not only to the major indices, but also market sentiment. And then we're watching the VIX as well.
You expecting any type of bear market sort of rally, any type of snapback before we hit 3,200, the new lows? And how far could that take us? What do you think?
I do think so. So I still am kind of holding out for an oversold bounce in here, but we're talking about days in duration potentially. And of course, if we do see these levels broken, we'll give up on that pretty quickly. But we think that there will be a relief rally that's sizable even before year end. And yet it was likely to occur from lower levels, unfortunately. So it's not something that we're recommending positioning for, at least not until we see some indications that we have this intermediate term oversold condition and improved momentum off of that reading. So we certainly don't have that as of yet. And these bear market relief rallies, so can be something of the nature of 20, 25%. So they can be tradable if you're very nimble and talented, but also they can, of course, provide selling opportunities in this kind of cycle. We just don't have any way to know at what level that comes from. If anything, perhaps that 3,500 level might be relevant.
Are we close?
So she's talking in particular that the market and Apple is going to correlate with the S&P. Obviously, I mean, S&P is a big part of the market. And so I'm not touching Apple, guys. I'm not like putting your cash in Apple right now, given that no one's even buying the stupid iPhone. Like who's buying this iPhone 14, bro? Who's actually buying it? Like, put it in the chat. Are you buying this shit? I mean, I know they slashed their production cost because they know it's not that relevant, but like, I've been saying this for a while now. I'm not trying to act like some guru or anything, but since June, I've been like, what is Apple's growth curve? Like, I've just been to myself even. I've been saying like they can't make the phone any better. So what's so beautiful? Like 2016 was the time to get into Apple. Like, is it really the time right now? I don't know. Jay Schwat says I bought it. Yeah, but Jay Schwat, you make a lot of money. So I'm talking about the average person. I'm talking about a regular person with a regular salary. Are they really dishing out $1,000 for an iPhone? You know. Also, what was your previous phone, Jay Schwat? Because if your previous was like an 11 or a 12, it doesn't count. You were due for an upgrade. They need people that don't need an upgrade to upgrade. At least to get the numbers to be more intact, right? Because a lot of those people that need an upgrade still aren't going to upgrade like me. Like, I have a 12 Pro Max. I probably should upgrade, but there's no way I'm buying the 14, bro. It's not worth it. Even if I get $400 back. Like, I'd rather put that money into the stock market right now versus an iPhone. Like, I think, you know, the key thing about like a recession coming or something, you really ask yourself, do I need to do this? Like, $400 could really be valuable 2 months from now if, you know, you don't have the highest salary. So do I need to put that into an iPhone? I think that's the question at the end of the day that everyone's thinking. Apple's growth curve is that they are growing market share, rev, and have more calories and make more money than God with more coming in. Yeah, but that means the market has to be okay with accepting it as a $3 trillion company. And I don't know if the market's going to be okay for a while accepting them as a $3 trillion company. I think we're going to have to see. Your voice gets quite boomy, loudy for a second when you start speaking after a longer pause. It normalizes almost immediately, though. Just thought you'd like to know. Yeah, thank you, It2S, for that. I do know that. I've been trying to fix it. Someone told me that last week. It's super annoying after a couple seconds and then I talk, but yeah, I guess that's a StreamYard thing. I'll try to fix that so it's not as annoying on the ears. Might be a compression setting. That's also something. Might be a compression setting as well. Why do you think Buffett owns so much? Well, yes. I mean, I don't think Buffett's wrong on this, but remember he started buying it in 2016, so he's up quite significantly on his position. He obviously believes they're going to grow in the bull market. I think it's a question of when we get that bull market, because if we don't get that bull market for another year or two, I don't know if we can, like, Apple cannot be, here's the objective truth. Apple cannot be a $3 trillion company if the market is down. It's just that simple. So for Apple to win, like, and really win, it needs the market to be up. By the way, Ginkgo Bioworks up 3.35% up today. So I guess Warren's betting on them in the long term, like he always is. And in the long term, maybe, yeah, Apple should be fine. But I don't know if right now, even at these prices, it's worth jumping into. And again, I could be wrong. Maybe 140 is the best price. So maybe it's the bottom. And maybe all this is nonsense. But like, I said that in June, and then we had this crazy rally, and everyone was like, oh, you're just fear mongering. And it's like, this is not natural. Like, we know it's not natural. Like, there's some things where it's like things have to go down. You have to deal with it. And I think a lot more has to happen. That doesn't mean you can't stop DCAing, but I think there has to be some more pain before we see things. SoFi 486, Meta 137, Tesla 268. Who's excited for AI Day? I don't know how much of it I'm going to be able to catch because I'm going to Yale this weekend. Actually, I have some work to do. So I'm going to be gone the whole weekend, which is why I'm making all my videos today so I can put it out there. But we will see. To be clear, I'm not saying Palantir will make all-time highs. I'm saying that the world turmoil will be a positive catalyst for Palantir. Yeah, Gabe, I mean, I agree with Gabe on this. Like, as the world goes crazy, that's going to be good for Palantir, and that's like a basic thesis that we believe in. Echoes, it's still a bad company. All that Ukraine stuff is cool, but the company is trash. I'm sorry. Yeah, I mean, you gotta learn your research to understand Palantir before you say it's trash. But to each their own. To each their own. People are asking why is Palantir trash. He doesn't have a reason for why he's saying Palantir trash. He's just saying it. So You're not going to get the best answer from them. Yes, Chris is going to be doing Palantir Weekly on his pod, or the pod on his channel. So if you're not subscribed to Chris yet, haven't checked that out. He's going to start making a lot more content. It's the pinned comment, or it's the comment on the screen right now. You can subscribe to him. And there's a lot to talk about. I wish I could do the weekly today. I really wish I could, because there's so many contracts to talk about, and like PRs. There's another article that came out, Chris, today in Bloomberg. That's a bit negative about Palantir. I might make a video about that later. It has to do with the NHS. So there's a lot to cover. There is a lot to cover. All right, let's do this one to end it out. It may get worse before it gets better. This is kind of what I was saying, even though I think it's going to get really worse. But this one says we're still in a bull market. Let's see. Sachin, I don't know if he's joining. Again, he's been really busy with work. He might be. So we'll see today.
Where's your support level for the S&P? Because a lot of people do believe we're going to see more downside coming up.
Thanks, Frank. Yeah, it's been, as you mentioned, a brutal month in the markets. Unfortunately, I think in the short term that we're going to see further downside. So we're looking at 3,500, and then the market breaks through that. The next level we're looking at is 3,200.
So what you're describing is us basically giving up all the stimulus-related gains that we saw during the pandemic. What does that mean? Is that a situation where you would advise your clients to buy the dip, or is it a wait-and-see thing here?
Yeah, it's a great question. You know, if you look at where the 10-year Treasury is, we're at 3.7%. We saw 4% this week. I think it's very reasonable to assume we'll see 4% again. So if you look at the last time the 10-year Treasury was at 4%, that was in 2010. And as you mentioned, then at that point in time, the market was trading at a 16 times multiple. So if you look at the lowest consensus estimate on the S&P 500 for next year at $200 a share, you apply that 16 times multiple, and that's where we're at 3,200, which, you know, 3,500 is 5% down from where we are today. 3,200 is 13% down from where we are today. So, you know, what are we saying?
So she expects 13% down, which would be 33% down for the year, which would be a recession.
Clients, we're telling clients that it's important to be patient, be confident, look for value in different asset classes, different styles of investment, and hang in there, because I think it's going to get worse before it gets better, but we still are in a secular bull market. So, you know, secular bull markets last 15 to 20 years. This one started in 2013. So I think it's important to take that long-term approach, but I think there's further downside from here.
Yeah, of course, we all want to take a long-term approach when it comes to our money, but in the near term, a lot of people are seeing a lot of pain. Are there any companies that you're looking at right now where investors can find opportunity today?
I think, you know, if you look at energy, I still believe energy is the cheapest sector in the S&P 500, even though it's up 40% year to date. We're down 22% since June. So we like the big integrateds. Take a look at Chevron. Chevron has a dividend yield of almost 4%. They're growing their dividend at 6% a year. They've got a super strong balance sheet coming out of COVID. They've got great margins, especially in their refinery business, which I expect to continue given the structural imbalances we have in equities. I'm sorry, in energy. So I think that that's a good company to look at. But again, I think you have to be super selective and you have to be defensive in this market.
Yeah, of course, you definitely have to be selective. But I want to ask you, and I've been asking a lot of people this question, when you're looking at companies that can ride out this whole situation and this sell-off, what are you looking at? You just mentioned dividend investing just a minute ago and the dividend for one stock. Other people are looking at free cash flow or margins. What's your big focus when you're looking at the quote unquote quality of a company that makes it investable right now?
Yeah, it's a great question. So what is quality? So to us that, you know, we're very focused on strong cash flow, free cash flow, looking at the balance sheets of companies, but just much like we did in 2020, if you are in a period of prolonged economic slowdown, you look at the debt load of that company, you look at their free cash flow, can they sustain a period of prolonged economic slowdown? That's what we're looking at as it relates to quality.
All right, one last question before we let you go, Lizzie. Obviously, you know, during the pandemic, a lot of individual retail investors jumped into the market. As we just said, they're probably facing losing a lot of the gains they made during the pandemic. What advice would you give to them?
There's nothing fun about a bear market. You know, a bear market's much like riding a bull. The ride is not fun, but you need to be patient, you need to be smart, and you need to be confident. So I think, you know.
All right, that's pretty much it. They see the S&P down to 3,200. I wouldn't be surprised if that happens, but I guess we're going to see what happens. Here we go. AI day a little bit later today. We're going to see what happens. Chris says, I didn't say I would cheat on my wife, just saying if there was a situation that didn't work out, I'd replace her with a robot. Makes sense because we have AI day today. All right, I hope everyone has a good day. I have a bunch of videos planned for today, so make sure you watch them because I need views. Also, if there's 150 people here, shout out to everyone being here. It means the world to me. If you did not sign up for my app, please sign up in the description. Would mean the world to me. My September results are coming out tomorrow for investors. I will make a video on that on Monday, but I'm putting the update out at wefunder.com/audia/updates. wefunder.com/audia/updates. Tomorrow, probably around like 12 p.m., there'll be a very long update there with numbers and all that stuff. So if you want to check that out, you can check that out there. So if you haven't signed up, it would mean the absolute world to me. If you sign up in the description, it takes 2 seconds. It's free. And you would give me some feedback on my product as the product becomes and develops. Outside of that, I hope you guys have a good weekend. Saturday, Sunday, I'm going to be gone at Yale this weekend. I'm doing some work, like the actual university. I haven't been here in like 8 years, almost 6 years. Last time I went was 2016. So it'll be nice to see the campus again, doing some work there. And that's pretty much it for me. I'll be back Monday with a live stream in the morning, market open. That's pretty much it. Nothing else too crazy. Hope you guys have a good weekend. Thank you for being here. Is the funding still open by November? Funding ends for my startup January 13th, 2023. I got the final number by WeFunder. That is the last day I can accept money. So January 2023. When are investors expecting an ROI? Well, that depends on how big we can get and how cool we can be. When you invest in a startup, you want to think about throwing that money away for a decade at least, because it takes a decade to build a good company. And if it takes less than a decade, either it's phenomenal or you probably are not building anything that cool. At least something that's not going to give you like 100x return or something, which is what you expect in a startup. Like you want something really awesome as a return. So it'll take a decade, but I'll be working my ass off for that decade to get it there. All right, everybody. Thank you so much for being here. I will see you guys down. Happy AI day. Prepare to have your mind blown if you don't understand the content. It's going to be super fun. Farzad, I know, is probably going to be covering it. He's an awesome guy on YouTube, so I hope you guys enjoy his content when you check it out. See you, everybody. Bye-bye.